Hello, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here. Now, if you guys been with my channel a long time, you remember I talked about a scenario when Trump, way back, now this is way back in my channel, back when Trump first got elected in office. Not long after. Way back, early videos I did. And I talked about China, and I said they're not our friends. They are actually leeching from the American economy. And I talked about shoes. How you go to the dollar store, and or these stores, and you'll buy like a pair of Chinese-made shoes, and how you'll wear them for like 2 weeks, and the strap will break, or the sole will come off of the shoe. I also talked about how China has done things in the past. One of the things is the melamine disaster. They were taking their industrial waste and putting it in food products. One of the foods, namely, was dog food and cat food. And it also found its way into things like milk products. From what I understand, baby formula. It was a disaster. Okay? Now, China, has gotten rich, and they've become the second most powerful economy on earth riding the back of America. Quite simply. And I talked about this, all about this. And I said, at the time, this is a long time ago, I said that if America were to put tariffs of 25-35% on Chinese-made goods. Now, at that time, there wasn't any tariffs, there wasn't any talk of any of this, but I was running these scenarios into the future, what might happen. Well, we're here, folks. We're here, folks. And I also talked about what this would do to the American economy. I said, at first, it'd be bad, and it would be hard. But, let's take a look at what American shoes are made like. American shoes are made of real leather. You go to the store, and yes, the price is a lot higher. They're not $20 shoes. They're more like $129 shoes. But you wear them for like 3 years, and they're still good. You put a bit of oil on them, on the leather, and soften the leather up a little bit, and you can wear them longer. They're well made. American hammers are well made. Chinese hammers, the first time you use it, the head flies off of the thing. Sure, it's cheap, right? But this is how they made their empire. They've built their empire on the back of America and buying all these goods. American jobs. American jobs come from American factories running. And how can you compete with a $20 pair of shoes if your factory costs $40 to produce them here in America? Well, the factory in China doesn't cost $20 to produce a pair of shoes. They produce them they make them look good, but they fall to pieces. It falls apart. Everything they make falls apart. And so now the tariffs are getting put in place. Well, this is going to hurt. The stock market's going to hurt. An initial knee-jerk reaction in the stock market's going to hurt. But I think that this stock market we have right now is made of Teflon. Honest to gosh. So I think the knee-jerk reaction this morning, I haven't even opened the markets yet. I haven't even looked myself. This is going to be like a surprise package at Christmas time for me to see what the markets do. But I'm going to try to look ahead right now, without even opening the markets, without looking at all. I'm going to say it's going to be a knee-jerk reaction in the markets. And then I think by tomorrow the markets will be starting to level back off and rebound again. That's what I think is going to happen. I don't think this is going to cause a market crash. That's my initial reaction. But China, let's take a look. Let's get the charts open and take a look at what's going on. Let's take a look at what's going on. So let's start the charts right here and take a look. I'll get my shot out of the way. Whoop. China here. China is talking about considering canceling talks with the United States. Well, they are not going to cancel talks with the United States. This is my opinion. And my opinion only is that they're going to go back right now and they're going to regroup for a while. That's my opinion of what's going to happen. And there's going to be a lot of people, a lot of the leaders of China sitting around the table, and they're going to be pounding their fist on the table, and they're going to be talking to one another, and they're going to be how's the word? Agitated. They're going to be very agitated, and they're going to have to come up with their own plan. They're going to be sitting around talking about coming about with their own plan. So they're going to go back and they're going to regroup, and they're going to say, what can we do? What can we do? And they're going to figure something out. They're going to all talk it over, and they're going to go back and they're going to talk it over and everything. And they'll come back to the table. I believe they'll come back to the table later after they talk it over. They're going to consider their options is what they're going to do. They're going to go back and consider their options. What's this article? Yeah. So this is what's happening. They're going to increase these trade tariffs exponentially. I don't think it's quite 4 times they're going to increase them, but they're going to increase them like 3 point something. I haven't done the math, but it's a good solid 3 times over anyway, is what they are now. They're going to increase them big time, the trade tariffs. This is going to put pressure on the markets for a little while, but I can see it putting more pressure on China than on the United States. The United States, they can trade within the country. They can buy consumer goods from America. America has got factories. They can produce their own shoes. And, you know, these factories have been sitting idle. They've laid off employees. Say you got a shoe factory in the United States. They've been sitting idle. They've laid off their employees. They've sent their employees home in some cases. And what's happened is they've laid off their employees. They'll be rehiring because people aren't going to be buying Chinese shoes. People still need shoes in America. America can produce their own shoes and make money internally from their own industry. America is the most powerful country on earth. Let's not forget that. And they have an ability that China doesn't have. They don't rely so heavily on they're a consumer country. They don't rely so heavily upon. They're not only a manufacturing country, they are a consumer country as well. That's what I'm trying to say. Where China relies heavily upon producing items and selling them around the world, they're not so much a consumer country. Now, China has been trying to become a consumer country, but it ain't working. It ain't working. They can't get it up and running. Okay, so let's take a look now at the silver price today. You know, you would think with all this going on right now, you'd think silver would be up. It should be up. It's not. It's down 13 cents. 14.77. I think this is ridiculous. The fact that the world is under such stress. This is the ultimate safe haven asset. Excuse me, folks. This is the ultimate safe haven asset. And what do we see? Down 13 cents on the day. It's disgusting. And if it wasn't for the paper market with them shorting silver, silver would be to the moon already. Let's take a look at gold. Gold price is drifting downwards. The world in turmoil, and the gold price is $1.80 down. What's cryptocurrencies doing today? Well, I'm going to have to refresh the page, but I was looking at it a few minutes ago, and it was 56.82. Let's take a look right now. 56.94. So it's drifting upwards, but slowly. It's holding its strength better than right now, better than an awful lot of other asset classes. Cryptocurrency is, especially Bitcoin, is becoming a bit Teflon. And like the markets, it's becoming Teflon. And the reason why cryptocurrency is becoming so strong this way is because of an army of what's called HODLers. And what that means is it means hold on for dear life. HODL, hold on for dear life. These people have bought Bitcoin as an investment. They're holding it in their wallets, and they're just like, they ain't going to sell. You know, and there's getting to be more and more of these people all the time who are looking at it as a long-term investment. And this is stabilizing, very slowly but surely, it's stabilizing the cryptocurrency markets and the cryptocurrency marketplace. It's incredible what's going on, but that's exactly what's actually happening right now. Let's take a look at cryptocurrency market capitalizations here today. And, you know, what we see is it's 180.6 billion, but let me refresh the page and see. 181 billion, just jumped. Okay, 55.8% Bitcoin dominance. I don't like to see the Bitcoin dominance quite that high. I like to see it more around 50%, but it only means that these altcoins at some point in the future are going to pop. They're going to go up. Because, you know, I'm looking out a couple years into the future on cryptocurrencies. And I see Bitcoin at about 20% Bitcoin dominance. But before it gets there, it's probably going to ride up as high as 60, even 70% Bitcoin dominance. And then it's going to start to fall off as acceptance of cryptocurrencies becomes more mainstream as time goes by. Let's take a look at the Dow Jones today. It's down 382 points. Now, they were worried. They were thinking it was going to drop 500. It's dropped 367 now. Listen, I'll tell you honestly, toward the end of the day today, you know, in other words, it's a knee-jerk reaction, but this market's a bit Teflon right now as far as things go, you know, and it's going to fall when it's ready to fall. Not so much something essentially pushing it down. This is the way I see it. And so let's move on today. You know, this market is going to drop off, and the Fed is going to support this market at a certain point in time. It's that support from the Federal Reserve, which is going to be the important thing. The trade tariffs is like noise in the background more. What's actually going to really support this market is when the Fed changes monetary policy, when they end quantitative tightening and they lower interest rates. That's what's really going to support this market. But that's when gold, silver is going to take off, and that's when the cryptocurrencies are really going to be takeoff. That's takeoff day for these alternative assets. And that's what we're waiting for, is takeoff day. Let's take a look at oil today. 61.20 is down 1.19%. This does not bode good for the Canadian dollar. Not good. Oil prices drop off, so does the Canadian dollar. I'm going to tell you what, if oil prices drop too sharply, you know, Canada is in big trouble. And this is big trouble for the United States. This is more trouble than the trade war that's going on. This is a huge problem for the United States. If Canada drops off a cliff and their currency loses a lot of value, and the reason why is because of the Canadian real estate market and how that real estate market is tied in really tight to the Canadian banking system, and how the Canadian banking system is tied in really tight to the American banking system, and how we have a loss of liquidity through the system because of all this quantitative tightening. You put all these things together, if the Canadian real estate market falls off sharply, it's tied in to home equity and home equity loans that are tied into the bank, and then those banks, in turn, are tied into the American banks, and it could create a huge disaster, and it's going to happen. It's a matter of time. Okay, so now let's take a look at U.S. Treasuries this morning and see what they're doing. You know, what we see in Treasuries here is we see a panic shift. They're buying in heavily into Treasuries today, all the way across the board. We see the yields falling. The U.S. 1 month is 2.43, the 3 month is at 2.42, the 6 month is at 2.45, U.S. 1 year is at 2.38, U.S. 2 years at 2.29. Look at that. 2 years is 2.29, and 1 month is 2.43. There's your yield curve inversion. It goes all the way up to the yield curve inversion goes all the way up almost to the 10-year. Almost out to the 10-year, I should say. And you know, we're getting some really big drops in the 10-year and in the 30-year. And so this yield curve inversion, I mean, it could work its way all the way out to the 30-year, which would be enormous. Enormous. Let's take a look now at the U.S. dollar index, 97.65. And the dollar is showing strength today. It's the thing is here's the thing. I wore these glasses today for a reason, this particular pair of glasses. You know, one of the things is I can see good through these glasses, and I really like them. And they're Chinese glasses, and I bought them at Dollar Store, you know. Here in Canada, they were $1.25. That's what I paid for them, because the Canadian dollar is worth just exactly that much less than the American dollar. But here's what I want to show you. Look, one of the things is missing. It fell off. It just fell off. Quite literally, I had it on my head, and I went to turn my head a little bit, and it just fell off. You know, there, it just fell off. But they stay on my head pretty good, even with that side missing, you know. So I'm not complaining, you know. I mean, I think I used them for about, let me see, 5 or 6 days. Anyway, okay, so here's something that we got to keep our eye on really close. Deutsche Bank. You guys probably all forgot about Deutsche Bank this morning. I didn't forget about it. I'm keeping my eye on them. They're down 2.6% today. 7.15. And I've told you guys, if they drop under €6, we got a problem. Houston, we got a problem if they drop under €6. Quite seriously. And I mean, I might as well laugh as cry. If you drop your milk and it spills all over the ground, you might as well laugh as cry. You might as well laugh over spilt milk as cry over it, because this has the potential to bring the whole system down. And that's why I keep my eye on it almost every single day. Listen, thank you guys for listening to this market report, and we'll catch you again very, very soon. Bye-bye, guys.